Good morning, everyone. Thank you for joining us today. I'm incredibly excited to be here as we officially launch the BlackRock Advisor Center, a project that has been months in the making and one that we believe will be valuable for you in terms of portfolio due diligence and practice management. This initiative wouldn't have been possible without the collaboration and dedication of our partners at BlackRock who are on the call today. Throughout this process, they've been really instrumental in helping us shape the StoneX version of this platform to deliver meaningful value, insights, and resources tailored to your needs as advisors. The best part about this is the StoneX version of the BlackRock Advisor Center can be accessed seamlessly through InvestNet. So putting those tools right at your fingertips here, this tool will allow you to analyze your existing APM models through stress testing scenarios, model comparisons, etc. Additionally, we've added most of the StoneX models within the tool as well. Think of your American Plus, StoneX Foundations, and StoneX Core models. Those are all present here. And if you need a brief refresher of each model series, American Plus is our specialty model series product that we run for advisors whose clients prefer having some exposure to the American Fund's name. StoneX Foundations is our series of passive ETFs alongside active fixed income. This series has a cheaper expense ratio than the core series, and the minimum there is 10,000. StoneX Core is what we like to call the bigger brother to the Foundation series, as it's balancing more income with long-term growth. This series contains a mix of mutual funds and ETFs. Some of the strategies include shorter-term allocations or tactical trades and some alternatives. The minimum there is 25,000. Now I want to take a moment to introduce and thank the BlackRock team members who have been pivotal in bringing this vision to life. Thank you so much. Eileen Hayes here and Trevor Johansson. I really appreciate their commitment to this project. It's been really outstanding, and we're thrilled to have them here today to walk us through the BlackRock Advisor Center. So with that, I'll hand it over to Eileen and Trevor. Take it away.
Great, Marcus. Thank you so much, and good morning, everyone. So grateful for your time and your energy to kind of dive into some amazing tools, as Marcus said, right at your fingertips that will absolutely help you have better conversations with your clients and make more informed decisions on what you're delivering. Just a really small story. When I first started at BlackRock, I had dinner with some of my best girlfriends, and my best friend said to me, Adam and I are so excited that you started at BlackRock. When you get up and running, do you think you could get Adam a tea time? He's always wanted to play there. And I realized that my best friends think I work at BlackRock Country Club, which is right outside of Boston for anyone maybe in the area. And so I realized two things. One, my best friends know nothing about me. But two, never assume people know what you're talking about. So I just want to give you a little history on what Advisor Center is. BlackRock was really built on the foundation of understanding underlying risk in institutional portfolios. And we have developed this technology that we call Aladdin today. And it is the largest and best risk platform in the institutional world. It's managing money for endowments, sovereign funds, governments, pensions, and about 8 years ago, BlackRock decided to leverage some of the best tools and capabilities of Aladdin and employ that into the wealth management and advisor community. And we call this version of Aladdin Advisor Center. It's completely free, it's open architecture, and it was built to help you upload your portfolio. And as long as it's comprised of mutual funds, ETFs, closed-end funds, equities, or cash, you could get some sort of Aladdin level risk on the model that you're delivering. And in Advisor Center is employed through a couple different ways, but the best way and what we are so proud of is a deep integration with the InvestNet platform, which, as you know, 116,000 advisors and $6 trillion on the platform. And the best integration piece and value that we're delivering is the ability to push and pull your models from the InvestNet instance into Advisor Center and back and forth so you could seamlessly run a proposal. And we will show you exactly how to do that in the demo. And there is a lot to cover today, but some key takeaways that we want you to think about is maybe one or two gaps that might be mitigated by the value of this tool. Maybe it's understanding capital gains tax in your underlying holdings. Maybe it is stress testing your model against relevant and current economic environments to see how you would fare, or maybe it's understanding how you stack up against a really large scale and scope of a peer universe. We are happy to support you as a takeaway from this call, do other demos, additional support, help guide you through the tools. So with a lot to cover, just be thinking about a couple takeaways that you want to do today. I want to introduce my colleague, Trevor, who's doing the demo today. Trevor spends every day on the ground with advisors, leveraging this tool to help you build better portfolios, better models, and better outcomes for your clients. So with that, I will hand it over to Trevor.
Awesome. Thank you, Eileen. Appreciate the introduction. And Marcus, you as well. Thank you very much for having us on the call. Always a treat to talk through BlackRock technology and some of the portfolio and resources that you guys are all going to have access to hopefully enhance your practice and enhance your client conversations. So in the next, call it 30 minutes or so, what we're going to do is we're going to go through what is changed and what you guys have access to, which is your own version of BlackRock's Advisor Center. There's a couple of really neat tools that hopefully look new to you, and you have some good use cases for them. A couple things real quick before we get into the actual Advisor Center from BlackRock. There's a couple things we wanted to point out within your guys' StoneX Wealth Management portal here. You can see that I have BlackRock Advisor Center preloaded right here. This would not be there for you guys when you first log in. Good news is it's really easy to add it. All you're going to do is come up to here, this cog, your settings icon. Click that. BlackRock Launchpad is going to be down here. You're simply going to click the plus sign and you're going to drag it right up. So again, BlackRock Launchpad, it's actually right here at the very top. Click the plus sign, you can move it around and it'll then appear on the left side when you log back into the website. Super easy, but wanted to call that out. It's not going to be automatic. Second, and this will make more sense as we get into the tool itself, you also have this area up here to go to manage and go to your advisor models. This is where, as you're making changes, whether on BlackRock's tool or in here, you can actually click into your model, the specific risk profile, go up here to actions, and also access the 3 tools that we're going to go through today. So again, this is just one of the ways to get there, which, if you're building on portfolios, is really easy and simple. But wanted to call that out as well, as there's one other way, which is kind of more of a landing page for BlackRock Advisor Center and these 3 tools. So we'll get right into that. I'm going to go back to the home page. I'm going to boot up the Advisor Center. And as this is loading, there's going to be a few different choices here, and we're going to go through them and spend some time showing you guys how to upload a portfolio, as well as compare, blend, and even send back to InvestNet like Eileen was talking about. So a couple of really unique use cases. The first one, and probably the most popular tool we have, is called 360 Evaluator. This is built on Aladdin, just like Eileen mentioned, and it allows you to analyze a client or a prospect's portfolio, or even compare up to 3 portfolios side by side. So maybe you're in a competitive situation, you're having a prospect's portfolio compared to maybe one of your models, and you can even compare that to a benchmark as well. You could do 1, 2, or 3. It doesn't matter. You have some flexibility. To begin with, though, I'm going to show you how to upload a portfolio, and then we're going to get into a comparison and what that looks like and how IC advisors most use the tool. So I clicked on 360 Evaluator for us. Since we're starting
Trevor,
from scratch,
Trevor, we're still seeing the platform.
Oh, okay. Give me 1 second here. Let's do this. Let me know if you see this new tab loading up, Eileen. Perfect. Okay. So this is the 360 Evaluator. I'm going to show you how to upload a portfolio. Just give me a moment here while it boots up for us. Go ahead and click Create New. Once we're in here, there's a couple different ways you can do it. It's really simple. Up top, you can type in individual tickers. You'll see IVVs or S&P 500 ETF. However, portfolios tend to be bigger than just one holding, obviously. This import holdings on this black bar across the screen, you can click that. If you have the tickers and weights or the tickers and dollar amounts in Excel, you can actually copy from Excel and paste them right into the website. Makes it super easy, and it'll pre-populate. I'll show you what that looks like. I just have a couple tickers off screen. I'll paste them right in. And you'll see we'll get a super basic IVV AGG 60/40 portfolio. You can go ahead and name it. At the bottom left, click what it is. You would then click save, and that becomes a saved portfolio for you. This pop-up will appear. This is BlackRock's compliance requirement. We show a 3% advisory fee. Obviously, that's super high. You can change that to whatever you might want it to look like, or you can also simply turn it off and click apply. And this is the 360 evaluator tool. So this is going to be your one-stop shop for editing portfolios, sending them back to InvestNet, or even doing comparisons. So I'll show you what that looks like really fast here. I'm going to go into one of my saved portfolios. For the sake of this conversation, this is my example prospect 60/40. I'll run through each of the sections of the tool in a second. And what I'm actually going to do here is I'm going to compare it to one of the StoneX models. So you can see here, again, example 60/40 portfolio. You have some characteristics which we'll cover in a second, and it's a diversified mix of equity and fixed income mutual funds. What you can do here from this point is click this gray circle on the right, go to a model portfolio. It's going to default to BlackRock models. You can actually come over here. These are the StoneX specific models that Marcus mentioned at the beginning of the call. A really cool integration that you guys have right at the touch of a button here. I'm going to go ahead and pull in the moderate strategy since it's comparable to the 60/40 example. And again, you're going to see the same output. However, you're going to now have two portfolios side by side. So as you're preparing for a meeting, or someone's running reports in advance of your meeting for you, or you're looking maybe to share your screen during the call with a client, you can have this sort of more in-depth conversation if you get asked questions or just want to know what their portfolio is looking like compared to maybe one of your portfolios or a prospect portfolio. So as you can see, you get historical return. You have historical risk, which is another way of looking at standard deviation. So how volatile has the portfolio been over the last number of years? In this instance, we're going back to about 2013. And of course, you can change the time periods right here. We're doing the common period. That's the earliest common start date. We have up and down capture versus the S&P 500, right? So the whole idea is we want to limit some of that downside exposure while still participating in the upside. So see, again, this example on the left is capturing about 62% of the upside of the S&P, and then about 75% of the downside, compared to the StoneX foundation model, capturing less of the downside, which historically has contributed to less volatility and higher returns over time. Kind of a Goldilocks situation with higher historical returns and less risk. And then on top of that, we show fees, right? So what are the underlying expense ratios of each portfolio? You can see example on the left is about 61 basis points compared to the StoneX model at just under 40 basis points, another competitive edge to potentially bring up. I'm getting into the tool. Maybe this is something where you guys are, again, preparing for a meeting or even sharing your screen on the call. You can see the individual tickers. Equities are in purple, fixed income is in green. And I'm spending the most time on this tool because we tend to see advisors use this the most, but there are a couple others that we're definitely going to get to. And you can start to walk through some of these different sections on the left. So again, you can see we have the example on the left, the StoneX on the right. This is just looking at the equity portion, and it's in regards to the geographic side of the portfolio. So you can see the example is typically what we come up against, right? When we think about either a client-built portfolio or maybe from a different advisor, when you guys are in that competitive prospect kind of conversation, to where it's overweight US, maybe underweight international. They have a good amount of technology, as you can see here in the sector weightings, maybe a little bit underweight compared to StoneX. You also have your Morningstar style boxes. However, we go a layer deeper to not just show you large cap, mid cap, and small cap. Of course, you get it broken out by growth versus value, right? So an easy call out here would be an overweight to mid cap. We know that small and mid caps have been a little bit challenged, to say the least, over the past few months. What's really neat though, and where we do bring it, even a step further, is any one of these colored sections you see across the tool, you can actually hover your mouse over, and it'll show you which fund is driving that exposure. So whether you're making changes to one of your advisor portfolios that you created yourself, or again, you're preparing for a meeting and want to have a conversation as to why maybe they're overweight mid cap, where is that exposure coming from? Same thing for any one of the sectors, as well as geographies. So some pretty cool data there to hopefully make your jobs easier and more efficient. There's a few other deeper dive or just more in-depth characteristics there, which I'm not going to cover and spend too much time on. Moving on to fixed income though, real quick. Again, you can see duration, 12-month trailing yield to help you edit and have better conversations there, as well as credit quality, right? So again, the idea being, if you're building your own portfolios and you want some more analytics, or if you want to have a conversation about maybe why someone is super overweight high yield, or if someone is overweight something like small caps, mid caps, overweight energy, whatever it may be, we're hoping to call out a couple of those instances and allow you to have better client conversations. Moving into the next one, performance. Again, very straightforward. I mentioned that we're going back to about 2013. That's just the earliest common date of all the securities in these two examples. It'll look a little bit different depending on what tickers and securities you guys have in your portfolios. You can see performance through time. You can change the dollar amount through here. A little bit similar to the Morningstar hypothetical, just laid out a little bit more cleanly. We show historical risk horizontally across the screen, total annualized return vertically, just another way to look at it. Here are some of those other statistics in terms of volatility. And also, again, like we saw in the first part, up and down inside capture versus the S&P. Eileen mentioned that BlackRock was founded on risk management. This is all powered by Aladdin, which is something that our portfolio managers use to do similar types of research that we're talking about today, but that also you guys have access to through the tool. One of the ways we look into that is not just saying, okay, the portfolio had a standard deviation of, let's say, 15%. What's actually driving that risk? So for example, if you wanted to lower risk in your advisor built portfolios, you come in here and say, okay, obviously this is a 60-40 equity heavier portfolio, arguably, at least most of the portfolios in equities. If I wanted to lower my risk, one of the places to start could potentially be lowering the equity risk. Obviously, purple is equities, and it even shows you which fund is contributing to more of that volatility over the last number of years. So maybe not something for every client conversation, but certainly more in-depth portfolio analytics as you're building portfolios. Something that is relevant for clients, however, is our scenario section, and I'm just including yield there to get the full picture for total return. It's one thing to say that your portfolio returned X and had a volatility of Y, like no one really knows what that means. However, what clients do understand and relate to is when interest rates rise, interest rates fall, maybe they remember 2008, making sort of the investor experience a little bit more real for them by providing a couple specific instances here. So again, if someone's hoping to decrease their volatility, decrease their risk, but still looking for a similar 60-40 type of portfolio, like we're having this conversation hypothetically about here now, you can see that in 2008, the portfolio on the left was more volatile and sold off more than maybe the StoneX Foundation's model. Again, if someone comes to you and says, oh, I'm worried about interest rates rising, I don't think we're going to have a lowering of interest rates as quickly as maybe the market thinks, or what happens if the 10-year rate rises, you can have conversations about how potentially and hopefully you're helping solve for some of those worries and concerns. And then the last section I'm going to cover before moving to a different tool is this is something where we actually color code each fund in the portfolio. And I'm just looking at the example 60-40. I'm not looking at the StoneX model here, although you can click it, certainly. This is taking each fund, for example, this Franklin Growth Opportunities, it's a large growth fund. It has an expense ratio of 66 basis points. And over the last number of years, it's color-coded orange because that corresponds up here in the middle, which you can see as the bottom quartile of returns. Right, so not every mutual fund is bad, some we're saying. There's plenty of green here on the page. Just another data point to call out and say, what's the story behind this fund? Again, it's up over the last number of years. It's just not doing well relative to its other competitors in that large cap growth category. So again, trying to provide you with some unique data points there, all in one place, which is here in the 60-40, or here in the 360 evaluator. The last thing I'm going to cover before jumping into the other tools that are a little bit quicker and have fewer sections like we were going through. Let's say you wanted to make some changes to one of these portfolios. You could actually come in here and edit one of the portfolios, and this is where you can actually send it back to InvestNet and even do a couple of things. So you'll see it actually calls out which funds are not available on your platform. That's hugely helpful, as you could probably imagine. You could also come in here and you can make changes, like changing the weighting of the portfolio. And you can also come back out from editing, and we're going to go ahead and click blend. And you can actually combine portfolios together. So again, I click this action button, I click blend. I'm going to boot up a similar screen to we just saw that was edit. This will just be a blend area. Instead of having this drop down, say funds and stocks, where you can type in tickers, you can change it to your saved portfolios. And you can remember we just did that when we uploaded the IVV and AGG, really simple 2-ticker portfolio. I can actually find that because I saved it. I can pull it in. And then you can even change the weights here. So let's say you want to do that 50-50. You could do client portfolio number 2. Really quick, click save. This will now be a saved portfolio. It'll bring us back to the comparison. You can see this is a new portfolio coming up here, similar story. And now that you've made those changes and even blended, you can actually send it back to InvestNet, to which it'll then appear, as you just follow me here, and I'm jumping around a little bit, it'll appear in your saved portfolios. So some really cool functionality there. And again, if you're editing portfolios within BlackRock, you can send it back to InvestNet. And of course, if you've already have portfolios loaded up on InvestNet, your saved portfolios, that's what will appear within the BlackRock tool. Fantastic. Well, I'm going to go ahead and pull up one of the other tools we have here really fast. And it might be blank for you guys for a second. Just give me a moment here. Speaking of mutual funds and sticking with that theme a little bit, we have a specific tool that actually shows historical capital gains and year-end distributions as firms release them in September. So there's a couple of use cases here that I'm going to go through. One of the other tools you'll click on when you boot up BlackRock Advisor Center from here is our tax evaluator. Again, you can see that it starts with your saved portfolios. You can create a new in the exact same way, ticker by ticker, or by copying and pasting from Excel like we showed. I'm going to pull up that same prospect 6040 that I was using in the last 360 evaluator tool. This is a really unique resource. What you'll see here is, again, a few mutual funds from various asset managers here on this first section. What we're showing here is the historical capital gain distribution from those funds going back 4 or 5 years or so, going back to 2020. And what you'll see is, again, not every mutual fund is bad. However, some pay out more gains than others, and that's all we're hoping to call out here, right? So as you're having those conversations or even building out portfolios of your own, you tend to want to understand what that fund pays out, at least on average, year over year. Is it a capital gain worst offender? Is it kind of right in the norm? Again, maybe this fund right here would be one to call out where last year and then even back in 2021, it paid out a capital gain over 20%. Where we tend to see the norm in the industry is anywhere from, call it 5 to 7%. We do show a couple iShare ideas on the right. Those are BlackRock ETFs to give you an idea of what kind of fund would be similar to this mutual fund, right? So this is a large cap value fund. So you can see a few of iShare ETFs there on the right that are value equity funds as well. When we're coming into capital gain season towards the end of the year in September, you'll actually see an additional section here on the left. It'll be the first one, and it'll be basically as asset managers release their gains without actually paying them out yet. It'll be a section here that we actually capture all of that data and say, whoa, let's say a fund is paying out a 10% gain at the end of December. And you have a client that maybe it's been thinking about getting out of that position. You can actually pull all the mutual funds that you have exposure to, put them into the tool as a quote unquote safe portfolio, and then we will actually day to day, week to week, towards the end of the year, track those proposed capital gain distributions, so you can actually make some changes or get out of the fund before the gain, before the record date. So definitely a really unique resource, in addition to simply just showing the historical gains here on this section. One of the other unique areas of this tool specifically is this tax loss harvest area. What this is looking at is price return. So again, most folks understand what total return is. If you think about what contributes to an investor's experience, price return is simply the underlying price movement of the fund and doesn't take into account income or dividend distributions. Right. So again, just to pick on this large cap value fund, you can see that although it's probably made folks money over time from a total return, which again is price plus dividends being paid out. From a price return standpoint, which actually matters for being able to tax loss harvest something, and be able to sell something at a loss, someone's owned it for a year or 1 or 3 years, it's actually negative. So as far as taxes are concerned, and again, each cost basis is different. However, this would be a call out for this specific portfolio or this ticker. If someone has owned it for a year or 3 years, there could be an opportunity to actually sell it for a loss and do some tax loss harvesting. So again, trying to identify some unique data points. And then familiarly, this is what we showed on the 360 evaluator as well. We rank each fund in this exact same way by their Morningstar category in terms of performance. Moving right along, I'm going to pull up the last tool that I'm going to show you, and it's another way to evaluate ETFs, mutual funds. Maybe you don't need portfolio analytics. You just want to see if funds are underperforming. Are they high fee? For even some of your own, advisor built portfolios as you monitor them through time. This is going to be a great resource. And again, bear with me as I pull it up. This is called our investment quality tool. I'm going to use the exact same portfolio that we've been running with. It's a 60-40. You can see option for new or saved. I'm going to come back into saved, find that example 60-40, click analyze. And it'll, similarly to what we were showing previously with performance, it'll color code sort of in a stoplight format with green, yellow, and red funds that are performing top or in line with probably and hopefully what you originally were hoping for. Maybe some to consider reviewing, and what we would consider 5 in this instance that are red that are warranting, arguably immediate action because of a couple different factors. You can come in here, you can click fund details. This will show all of them, the red, the yellow, and the green. You'll see how it's broken out in a table format here. I'm going to go back to the overview. Let's say you're really only focused on the red funds that consider immediate action. You can just focus on those by clicking into them. And what this will do is it'll look at the tickers in your saved portfolio, and it'll say, how are they performing relative to peers? Are they underperforming while also charging higher fees than peers? Is there downside capture, or something we already talked about? Is that worse worse than peers? As well as capital gain payouts over time, et cetera, et cetera. And similarly, we'll give you a couple iShares ETFs here. So again, this is a core bond fund. We give you AGG, right? Super simple, very straightforward, but that gives you an idea of a lower cost ETF to switch into potentially, or even just go, hey, I know that AGG is a core bond fund. That makes sense for what this Western Core Asset Fund is as well. Same thing for large cap value, large cap growth, whatever it may be. Try to make it as easy as we can. So again, a lot of new information. Maybe some folks have seen Advisor Center from BlackRock previously. This is obviously super exciting because this is your own guys' version that you can access through InvestNet and through the StoneX portal. So we're very excited. Those are the 3 most popular tools. Again, I'll go through them real quick. 360 Evaluator, the Tax Evaluator, and then lastly, the Investment Quality Tool. And so with that, Marcus, I believe I'm turning it back over to you. Again, thank you so much for having us on the call. Very excited.
Yeah, absolutely. Thank you for providing us that demo today. Just want to say, if anyone is interested or have any questions in this tool, please feel free to reach out to me, marcus.williams@stonex.com, or email our Wealth Solutions bots. With that, I'll give you guys 1 minute back to enjoy the rest of your day. Y'all have a great week. Thank you.